Hey guys, Steve here from the turtlefollower.com with the strategy session for Monday, September 29th, 2014. Good to be back. We had a couple days where I was actually on vacation with my family. So today is the first video. We'll go over the watch list briefly and touch on our positions and their movement over the past 3 days. I didn't think we were actually going to have a video, but the power managed to come back on. So I'm more than happy to get started here. So let's take a look at the S&P 500. So I think when I left you guys last, we had the bounce off the 50-day moving average. Let's get this all set up. Here we go. Right, so we came in, we had these three sell-offs. We had the bounce off the 50-day, which I was feeling good. It sounded like the stock market outlook video was pretty accurate. But then we turned around and we sold off on the 25th. And sure enough, on the 26th, we were up, I think it was about 14 points. So between where we left on Wednesday night and where we are today, we're down about 30 points, 22 points from those levels. So as far as our positions go, I think we were close to being stopped out on Apple and something else during the 3 days that I was out. But it turns out that all 8 positions are still in play, and we'll take a look at those in a minute. But as far as the S&P 500 goes, I would say at this point we're coming right into that support level. All right, we're coming right into the trend line. The fact that we moved well off today's lows of 1950 is encouraging. I think we need to follow that up tomorrow with a nice open green candle inside the box. And then that'll basically give us our bounce off the trend line that we were looking for. You could see here on the weekly chart, we are coming right back into the 20-week moving average, which is the solid gray line. All right, but look at what's happening with the 10-week moving average. This is one thing that we're going to take a look at, is we're starting to have the 10-week move lower while the 20-week moves higher, meaning that short term we're actually not trending higher anymore. We may be going sideways. So let's keep an eye on that. But for right now, trend is higher on the weekly. It has been for some time now. Okay. And we're right at support. So if we're going to bounce, this is the area that needs to hold. If not, then what would happen is we're going to break down through these lows and also break down through the trend line, which then could potentially bring us down to, let's say, 1900 as the next stop. But for right now, we're still above the trend line. We're above the 50-day moving average. So for right now, we'll just keep it at that and not get too far ahead of ourselves. The NQs, again, similar. You could see here we bounced right off the 50-day moving average. Trend line somewhat intact, if we, depending on how you draw it, because we are only really using 2 points. If we were to use the tail of the previous pullback, then we are still above the trend line, above the 50-day moving average. But I'm not going to lie, there is some concern here. The fact that we are testing the 50-day as soon as we did from the last pullback, but it could also prove to be a great buying opportunity. And of course, the Dow still moving higher. Again, this is a little bit more information with the move back to 16,800. Okay, so this area right in here, 16,829, that definitely needs to hold. But again, with the nice bounce off of that level today, we could potentially be putting in maybe a sideways consolidation in the Dow. Looking at the weekly chart, you could see the past few weeks has really just moved sideways after we had this bounce back from the July lows. So as far as the market goes, I think we're in a little bit of a wait and see mode. We need to see if we're going to get that bounce off of these support levels, off the 50-day, off the trend lines, or if we're going to continue lower. Like I said, the fact that we did rally back off of those lows today and did so significantly, I mean, we rallied essentially 14 points on the S&P, and at one point we were much higher. We were almost to the point where we were down 2 or 3 points. So we need to see what happens. We need to let the market play out. But as we always say, the market does not dictate our entries and exits. Individual stocks do. Just a little briefer. I don't see any positions that were triggered today, any entries, nor did I see any from the last few days. But we'll go through our positions now, and then I'll touch on the watch list real quick and go over the new additions. So Apple continues to just move sideways in this range. Again, we were close to being stopped out on the 25th. We closed slightly below the $98 level, and since then we've actually just basically moved sideways. So this is another form of consolidation. The fact that all of these, essentially except for this little close on the 26th, we have moved sideways with each bar inside the other. So that is another form of consolidation. Now, potentially what may happen is we may turn around, reverse, break down through that $98 level, and then I am, happy enough to let this go and wait for a breakout over 103 to get long again. But for right now, we're still in consolidation. We're still waiting on the breakout over 103. If we can get that before the breakdown of 98, obviously it's a much better situation for us as we are long. But for right now, managing risk with the stop below $98. ADM up 0.85%. This one pulled back right into previous support. All right, this resistance from this previous consolidation became new support. So pulled right back into that and are now moving sideways. A nice bounce off today's lows. You can see we opened right at the lows and we rallied higher since. So this may be putting in a little bit of a rounded bottom where we move sideways and then eventually start to move higher. But for right now, stop is 49.08. Next stop level would potentially be, we're actually going to adjust this. If it happens or not, that's another story. But the next stop level is going to be 50.38, which is the close from 9/12. And you can see we bounced off of that level twice in the last 3 days. Disney up 0.1%. Bounced right off the support level we had identified, okay, being the top of this previous consolidation, the resistance. So we moved sideways and came back in, tested that level. So let's see. I'm hoping that proves to be a good point of support. You can again see on the weekly chart that we are pulling in off that trend line. We're touching the 20-week moving average, and we're also touching the top of the previous consolidation. So again, good area of support. For right now, 87.28 is our stop. Expedia up 0.79%. We talked about this coming down in a very well-organized channel. We had the breakout on the 24th, sideways movement, and then again today we had the breakout from that 3-day consolidation. So for right now, let's take some of these drawings off just to make it a little bit more easy to see. But you can see we came in, and now the 20-day and the 50-day, we were stuck between those two levels, and today we got the breakout over the 20-day. So I would say in Expedia, the rally's back on. Next stop level that I would like to see used, although it's a minimal move, would be something around this 83.49 area. All right, so if we can get that breakout over, say, 88.40, we broke this downtrend, so we'll take that off. I would say if we can get that breakout over 88.40, we'll be moving our stop to 83.50. Fidelity. All right, this was one that we were close to being stopped out of, not only on the 25th, but also today. So if we look at this in a little closer, we have the trend line intact. We've had sell-offs. All right, since we've had the breakout on the 24th, where I thought we're good to go, making new highs, we had turned around, sold right off on the 25th, and continued lower. So today we actually opened down below 55.94, moved down to 55.71, but then we turned around and moved as high as 56.67, and then finally closed 56.48. So this is one of the reasons we use closing stops. All right, fact is we would have been stopped out at the open $56. Whether that would have proved to be a good stop or not, that's unclear at this point. But right now we are still in the trade because we closed back above 56.41. So from here, I would say that the trend is definitely broken. I mean, there's no doubt about it. We came right up to the 50-day moving average. That's where it eventually was sold off. So, for right now, we're still in the trade. Whether that is true tomorrow or the next day, that remains to be seen. But for right now, still using a close below 56.40 as our stop level. GD up 0.16, came back in, tested that 20-day moving average. Looked like we were going to go back, test the 50-day. That didn't happen. We ended up slightly moving higher. For right now, I think we can move our stop to this 122.54, that being the bottom of the previous little low. Okay, we came back into this low area here, and we bounced off of that. So for right now, I think 122.54 is a good stop level. But if we can continue getting some nice movement higher, it looks like that 125 level may prove to be the next stop. Okay, so you can see right now we're using 122.54 because the 50-day moving average is above it. Right now, it's very difficult to draw any type of trend line on on the daily chart. Whether that's this line, I'm not sure. So for right now, I'm just using horizontal support as our stop levels. But you can see, came right off of that level. So 125 looks like it could potentially be the next support level. LUV down 0.71%. Right, so we're coming right back into that the 20-day moving average. We're consolidating, a lot of action going on in here. So what ideal world we would see on this would be a move higher and a consolidation in this area. Okay, that would be what I would want. I'd want to see that box filled in, and what that would allow would be this 50-day moving average to eventually work its way higher and provide a good bounce point for the stock. But for right now, we're still using 29.39. Looks like in another maybe week or two, we could eventually get to that 31.78 as our stop level. And the last one, RSG, it was in this consolidation. All right, it was in the consolidation. Trend lines here. We briefly were below it. It managed to retake the 50-day and the trend line. So this trend line this consolidation can come out. So let's see if this proves to be the low. If not, then we're still waiting for that break under 33.81. But you could see here on the weekly chart the nice trend higher. And it looks like, this would be the area that it would be bought along that trend line. But we are still waiting for a break below 38.10 to be stopped out of this trade. All right, so since we didn't have a weekend update this week, I want to just touch on the new watch list. This way everybody's on the same page. Everybody's has the information. I've said it the past few weeks, but it seems like this watch list gets smaller and smaller every week, whether that's for me being as picky as I am with the trades or the fact that there's not a lot setting up. I'm not sure, but the fact is we're only going to take the trades when they set up for us. So Alcoa, this was one I had exited personally on a break below 16, which I was using this level right here as my stop. So sure enough, I was stopped out. We came in and we actually tested this 15.59 area, and it seems as though we're bouncing off of it. We are having earnings on the 7th, so I don't think this is going to trigger anytime soon, but you could see the nice setup that is happening and forming. So a break over 17.26, I'd be happy to enter back into the trade and hopefully ride it up for another 25% gain like we had the last time. ABC, again, we had this on the list last week. We could take this trend line off, but you could see we're waiting on that break over 78.30, and then we would potentially use 75 as the stop. Allstate, here's another one that's moving up nicely. You could see here on the weekly chart We have a nice uptrend intact. All right, the 10-week is above the 20-week. Stock is continuing higher. So then we know we want to be long. Now we look at the daily chart and we can see a nice defined consolidation right in this range between 62.30 and 60.81. So the only thing that we're waiting on now is a little bit more sideways movement, which will allow this 50-day moving average to move higher over 60.80 and then eventually a breakout over 62.33. Nice setup there. Centurylink still have the uptrend intact. Okay, the 10-week is still over the 20-week. You can see it's reversed. Where on the downtrend we had the exact opposite. Okay, we had the 20-week was above the 10-week. Sure enough, that changed, and then the 10-week became above the 20-week. So that's where you see a change in trend. And what's happening now is we're coming into the 50-day moving average, and we're waiting on a breakout over 41.30, and then we would be able to use a stop here at 38.73. Dow, this is one that I've been long for a little while. It's been pretty much moving sideways, but you could see what's happening is we are now consolidating along the trend line. Okay, there's your uptrend, and I'm personally using a breakdown below 51.10 at this point because we have not made a new high. All right, if I were a little bit more aggressive, I would be able to move that stop up here to say 52.60, and I will move my stop there once we break out over 54.58. If we don't break out, then the stop will still be down here at 51, which is these previous lows. So the reason 51 is still in play, in my opinion, is if we were to move to 52.68, that would take a marginal break of this 20-week trend. I don't want to be stopped out for pennies, so I am keeping it at 51 and waiting on a breakout over 54.50. The one thing of concern with Dow right now is potentially a lower high. Okay, we had the high from here from 9.5 and a lower high from 9.17. But for right now, until that bottom trend breaks, then I am remaining long, and if we can get that break over 54.50, that would trigger a new position. Estee Lauder, again, it's been on the list for a couple weeks now, but that's what we're looking at in Estee Lauder. Move all these drawings at the top. So right now what's happening in Estee Lauder is we're starting to get the 10-week and the 20-week to move sideways. All right, so meaning that we are in consolidation, and actually the last few weeks the 10-week has been below the 20-week. Not a good sign if you are long, but we are not long yet. We are waiting to try and get long, and that would be over 77.33. EMC, this one is barely holding on. This one looked like it was very close to being a great setup. Sure enough, the sell-off on the 25th kind of took that away. But for right now, if we were able to get that break over $30, then we could potentially be using maybe even this most recent low here at 28.61. Home Depot continues to move sideways. This is exactly what I want to see here in Home Depot. We've talked about the weekly chart moving sideways, eventually breaking out, and now setting up on the daily. So if we were to get a breakout in Home Depot, I would probably take it, even though it's not 100% what I'd like to see. But if we were to be able to get that breakout over, say, 93.50, I think I'd use this gap right here at 86.88 as my stop, because that would put us under the 50-day moving average and still allow us a decent-sized position. But I've seen these patterns before, and this one has, in my opinion, the opportunity to move very far over the next 6 to 9 months. HOT, Starwood Hotels, here's our setup. Okay, we're still waiting on the break over 84.47. You could potentially use a stop at 82.06, or if you wanted to give it a little bit more room, you could even potentially come down here to the 78 area. Intel is looking good. All right, Intel, you have this. Activate this. You have this consolidation here along the trend line, along the 50-day. So I would say in Intel, you're waiting on a breakout over 35.26, and if you get that, then you want to be here at 32.50. All right, that would be my stop level, and that would 32.50 would be a break of the 20-week moving average. But you could see what's happened on the weekly chart as it moves higher. Okay, it's gotten very far extended from the 20-week moving average, and as it's moved sideways, that 20-week moving average has come closer to the current price. So the longer that happens, the 20-week comes in, then I think that provides more support. But as far as Intel goes, I'd be very happy to see a breakout over 35.20 and a stop at 32.50. JWN's been on the list for what feels like forever. We're still waiting on the breakout over 70.57. Potentially could use 67 or even 65.12 as your stop levels. Kroger. All right, this one broke out for us last week, and now it looks like it's offering another position to or another spot to potentially get long. All right, if we were to get a breakout over 52.69, I would be using a stop down here, say around 48.67, or potentially $50 even. I think what happens here is if you got the breakdown below the trend line and the 50-day moving average, that would be where you would want to exit the trade, probably right around here at $50. But 48.67 is a little bit more well-defined with two significant lows, whereas $50 is really just a small sideways consolidation. So however you want to trade it, but we're still either way waiting for a breakout over 52.70. LEG moving sideways. Again, aggressive traders can put their stop here at 34.82. Maybe you're an options trader. Me personally, I think the next stop would be, if you were going to be long and wanted to be long for a while, your stop level would want to be down here at 32.50. LYB, Lyondell Basel, I guess is what it's called. I couldn't tell you what they do either. But the fact is, I can read a chart, and here's what the chart says. That's what my chart says. All right, so here, great little bounce point. We get that break over 115.17. Again, aggressive traders, you could put your stop right here at the 50-day, say 110. A little bit more conservative, you could put your stop here at 106.23 and then eventually trail to 110 after a few weeks in the trade. But that's a good looking setup. Again, I have no idea what they do. It is a materials company, so they must do something with chemicals or materials. MJN. Okay, this was one that was on our list a couple weeks ago. We got the breakout. We missed it. And guess what? It's back on our list. All right, so here's your stop levels, breakout levels, and here's your consolidation. All right, so you're looking at something breaking out over 98, and then I would probably either use 93.95, or again, if you want to be a little more conservative, it's within our criteria for our stop, 91.42. MERK continues to just move sideways. This is one that broke out a little bit and hasn't really done much since. So I'd be looking at something along the lines of a breakout over 61.20, and then again, depending on how conservative you want to be, either you're putting your stop here at 55.63, or maybe even using yesterday or Friday's low of 58.50. PepsiCo is another one along a nice trend line. You can see how well it's trending higher. All right, Here's your trend line. And here's your support and resistance areas. Support, resistance. What happens between those is our consolidation. All right, so you're waiting on entry over 93.82. You could put your stop at 90.85, or again, if you want to be a little bit more conservative and stay in the trade a little bit longer, 88.15 would be the position, would be the level I would be looking at. TXN, this one's a little bit different in that it's a much wider consolidation that it's been in, and it has been for a while now. All right, it just continues to move sideways. So you're still waiting on that break over 49.34. TYCO, this one concern that I have with TYCO is that we're potentially having lower highs, lower lows, but we're also having higher lows at the same time. All right, so we're pretty much in this symmetrical triangle. So not the typical consolidation, but nonetheless, it looks like we have a double bottom and a double top. So I would be waiting on a breakout over 45.15 and potentially either setting a stop here at 43.72 or 42.68. On the other hand, if you were to look at it from the short side, maybe this trend is getting tired. On the weekly, very nice trend line. You may get the breakdown below the weekly trend, but I wouldn't want to really be short until it broke 42.78, and that's one of the reasons that I think 42.68 would be the right area to put that stop level. UNH, here's your trend line. Okay, so this is in what appears to be where are we? Redraws channel. What appears to be a channel. All right, so we're coming in off the highs of, or the resistance of the channel. Here's your consolidation area with your support and resistance. So UNH, I would be waiting for a breakout over 88.50. With that said, it looks like we would either need to have the 50-day moving average over 85.60, or the trade might not actually set up the way we want, because the next level would be 79.23, and that puts us at a pretty wide stop and not a favorable risk reward. So UNH, let's see how that plays out, but for right now, it's not one of the high criteria or high, on the setup list. WMB broke out, continues to move sideways again. Look at here on the weekly, as it's moved sideways, what's happened? The 20-week moving average has come into play. Yes, the 10-week is lower. I'm sorry, the 20-day is lower than the 50, but the 10-week is still above the 20. I think if we can get that breakout over 59.15, we'd be able to use this 54.50 as a good stop, and that would be a great reference for right now. And our last one, the infamous WYNN. This was one, if you guys didn't see it, we were long this stock. I think we got stopped out somewhere, I don't even remember, somewhere in here maybe. I think it was actually here. On this break below the 50-day moving average. I did an anatomy of a stock trade video on this, so definitely go back and check that out. But for right now, we are definitely trending higher. And what's happening here is we are consolidating again well above the 50-day moving average. So if this were to set up, I think it may prove to be a short-lived move higher at first. Okay, there's your setup. But again, if this continues sideways, the 50-day moves higher, then I think that's a good-looking setup for our next trade. And you could even potentially put about a 10% stop and still be well below this level. I don't know if that would necessarily be the level you would need to get to, but it probably needs to be somewhere in this 78.56 for your first stop level. But again, what I'm anticipating with WYNN is for this to move sideways between 82.39 and 80, allow that 50-day moving average to come into play, and then eventually break out over 82.39, set my stop at 78.50. So just a quick roadmap on that trade. So that's really it for tonight, guys. A lot of information. I tried to cover the strategy session and the weekend update all in one video, and even the stock market outlook. So to sum it all up, I think we need to wait and see what happens in the next few days for the market itself. Right now, to me, it looks like we may want to see lower prices, but the fact that we bounced off of the level that we did today is a good sign. Our positions are fine. The closest one to being stopped out is FIS. And as far as our watch list goes, there's a couple good setups there. Intel looks good. PepsiCo looks good. So a lot of good setups. So we'll see if we can add some positions in the coming days and get our portfolio back up to 10 positions. If not, then that means nothing's setting up and we're following our rules and making sure we're not overexposed at any point, for some unforeseen circumstances. So like I said, if you have any questions or comments, please leave them in the comment section below. I'd like to hear how you guys were able to trade and fare without me on those past 2 days. Please subscribe to the nightly recap on the website www.theturtlefollower.com and subscribe to the YouTube channel. And also follow me StockTwits, Twitter, and Google Plus for any future updates. Have a great night, guys, and we'll see you tomorrow.